Freight rail company CSX missed its first quarter estimates. CEO warned of market uncertainty due, of course, to tariffs, at least in the short term. He joins us now with our Morgan Brennan, who will conduct this interview. Morgan.
Hi, David. Thank you. And Joe Hinrichs of CSX, it's great to speak with you again. Thanks for being with us. So we've seen some analysts call the quarter, quote, sloppy, messy. You posted the worst operating ratio in almost a decade, yet the stock is higher, up about 0.5% right now. As you said, you expect volumes to still grow this year, and that really Q1 was the worst. Why?
Several reasons, Morgan. First of all, more than half of the profit decline year over year were due to things we don't control. As you know, our rates for export coal prices are tied to the commodity price. They were down meaningfully, and fuel came down in diesel. But we had our own operational issues, as we acknowledged, and we're going to fix those. A lot of that has to do with major projects we have going on in our network. Hurricane Helene took out a big part of our network in eastern Tennessee. We're rebuilding that. And then also we have a major project going on in Baltimore. We're rebuilding a 125-year-old tunnel there. So a lot of that has pushed the traffic to the Midwest, and the weather in the Midwest, whether it's flooding or cold, hurt us as well. But we have work to do to get our network running, but demand is pretty stable, and we're pretty encouraged by that.
You're at the front lines of this rapidly evolving trade policy. How are you being impacted by tariffs? What are you seeing?
So what we've seen recently is steel production in the U.S. has increased. Our demand over the last few weeks in steel has increased, so that's encouraging, probably impacted by the tariffs. We had a strong first quarter in international intermodal, so the things coming into the ports. We'll see if that was pull ahead. We're not hearing that from customers, but of course it could be that way. A lot of the Asian imports go into the West and come to us from there as we get them in Chicago, other places. And then automotive, we're watching very carefully. Automotive got to a slow start in January, mainly due to some production reduction to get inventories in line, and then some launches. But as we're seeing production grow in the U.S., that may have an impact as well. Other parts of our business are pretty stable. Chemicals, grain, ag, and food, aggregates are pretty stable. We're encouraged by that.
You don't sound like a CEO who is worried that we're tipping into recession here.
Well, if you look about, obviously we're always concerned about what may happen, but we can only tell you what we're seeing in the present demand. And at present, our demand order rates are pretty stable and pretty good, actually, across our line. Now, again, there are things that we do that necessarily aren't as impacted by recessionary type fears in the near term, like export coal, like the grain and ag business, for example. But we're watching those customer segments that are more impacted by things. Housing continues to be in decline, and that sector continues to be under pressure. But we're encouraged to see what happens with autos and steel and aluminum. And then again, we'll see what happens with chemicals. But that's a big sector, and they do a lot of export plastics. But right now, demand is pretty stable, and that's what we're seeing.
I realize this is an evolving situation with trade policy, and we keep hearing the term economic uncertainty over and over again. That being said, do you think this is going to spur more manufacturing here in the U.S.? And if so, what is that going to mean for CSX?
Well, uncertainty still is the word. It definitely is the word of the earnings seasons. But I can tell you that in the first quarter, we saw a significant increase in activity in industrial development project work with potential customers. So we had 500 projects in the pipeline starting January. Now we have over 600. So we had a 100 increase just in this first quarter alone. So we are seeing increased activity. That clearly has to be being impacted by the future look at what happens with tariffs. That's encouraging for our network because we're in the Midwest, the Southeast, where a lot of this activity happens. But we are seeing signs of that. At the same time, we're obviously watching very carefully what's happening in the near term as this 90-day period unfolds. What's really going to happen with tariffs? And I think we're all anxious to see that unfold.
Joe Hinrichs, appreciate the insights today. Thanks for joining me, the CEO of CSX. Guys, I'll send it back over to you at Post 9.